Hello, this is the TradeSide U.S. stocks and futures market preview for Thursday, the 13th of August, and Friday, the 14th of August, 2020. As we head into the back of the week again, this is also not options expiration. Next week is options expiration. It's been a highly uneventful week from some perspectives. From the broader perspective, you can start to see the market falling apart. Right? The bank stocks were down on Monday and Tuesday, hiding their numbers. The S&P got up enough to give you a 13 sell signal now, and then collapsed on Tuesday at the end of the day. On Wednesday, we made our way back up. But the amazing thing is the advanced decline ratio, which we'll look at in a few minutes. So they're slowly selling off everything, and everybody that understands what market internals are about and market direction and everything else knows that this is not pretty right now. So let's go through the major daily charts, and then we'll look at the intraday action, and then we'll talk about what's left for the week. It is not, as I said, options expiration week. Here's the ES front month futures contract. This is the daily chart of the broad market and futures form. Got the 13 sell signal on the ES. You can see we bumped against that risk line 2 days in a row. Doesn't really matter. Let's go on to the other stuff. We'll look at this on the cash index. It'll be clear. Crude oil down 13 cents to 42.54. Gold down $1.90 after selling off sharply for a couple days after a big run up for a couple weeks and then bouncing today. S&P cash gains 46.66, puts it right at the risk line of the 13 sell signal. NDX Nasdaq 100 up 281 points. The stocks up 72.43. That's new highs on the stocks. The biotech's up 61.76. That is nowhere near, matter of fact, near the lows of the 2 months on the biotechs. Russell 2000 up 8. Doesn't really matter. The VIX down $1.75. The trend closes at 1.39. Puts the 10-day moving average at 1.13. Volume on the Nasdaq. This is the key here, right? So we got the sell-off on Tuesday, and volume was the highest of the last couple of weeks. Basically, if you take out one day, the highest of the last 4 weeks. Today, we get this up day, this magical gap up and up day, and look at how this stands out, right? The lowest volume in months, right? If you take out that, there's a day there right before that 4th of July, the day before 4th of July holiday, that's lower than that. If you take that out, this is the lowest volume day since May. Remember, May had Memorial Day, which was a holiday. If you take those out, I mean, literally, you're talking about like one of the lowest candle volume days in a long time, and there's no holiday around here. So this is very significant that we made an upward move on no volume, but then let's look at the advanced decline ratio, and this is the key. And first of all, advanced decline ratio on the NASDAQ is plus 390, puts 10-day at plus 207. But let's look real quick at the 5-minute. Look at this. So we started the day at plus 1750 on the 5-minute chart of the advanced decline ratio on the NASDAQ. And even though the NASDAQ went up and the broad market ES went up a bit more during the day, the ES closed right at the VWAP, so it wasn't a big up day. But even though we went up, the advanced decline ratio went from positive 750 almost down to 0 and closed at 436, 390. Depends on which number you look at. A little bit of difference on the data. But at the end of the day, that is a big problem. You don't see that very often. And on the New York, again, it started at plus 1800. It closed at plus 850. And I put the daily chart back up, plus 770. Okay, we'll go with that. But let's see what that really means again. Let's take a good look at the S&P, which, well, we'll look at the intraday in a minute. Actually, we'll come back and look at the intraday. So that's what the advanced decline ratio did. Google up 26.70. It's nowhere. Apple up 14.54. It's near the highs. Now, keep in mind, we're going to have 2 special YouTube previews over the weekend. One of them is going to be about stock splits because for the first time in a decade, we're going to start to see them. Tesla already announced one. Apple's announcing we're going to have these stock splits. We're talking about what that means because you have to hold these stocks to get the split right. So typically, when they announce the split, between the time they announce the split and when the split happens, stock will tend to go up. Okay, and a lot of these stocks, they're going to split them because it's no longer palatable to trade these things, especially Tesla at $1,500 a share. Let's call it $1,600. No, do $1,500. It's a 5-to-1 split. That's going to bring the stock price back to $300 a share with 5 times the volume, right? In other words, there's no gain in the price wherever it splits. It may go higher before it splits, but even if it gets up to 1,800 splits, you're talking about a stock that's at $300 and $60 a share. It's going to be more tradable for us, which is great. In the meantime, though, you got to own the stock to get split, so it's probably going to go up. That's what typically happens. So we're going to have a discussion this weekend, a couple of extra YouTube previews, one about the market as usual, but one about stock splits. And then we'll talk a little bit about the election and economics in general. So those will be coming out this weekend. Netflix up $8.54, because that's still near the lows of the last 2 months. Amazon up 81.57. That's a minor bounce for Amazon. Tesla up, like I said, $180.37. It's a big move up. Facebook up $3.76. Goldman Sachs up $1.07. TLT, the 20-year bond ETF, down $1.51 again. The Dow was up 289, and that's it. So we're still, like, when you look at these charts, where are we? You know, nothing major, but we're up against the risk line on the ES, and also if you just look at it on the S&P, this is a key area right here, right? You got to see what happens with this risk line on both the futures and the S&P cash. So we'll be following that. All right, 5-minute chart of the ES. So again, if we go back, so this is the start of the week right here. A little gap up, sold off about an hour in, filled the gap, went lower, came back, closed flat, basically closed where it opened. Tuesday, gaps up, solds off, tries to fill the gap initially, doesn't, comes back up. Coming out of lunch, we're sitting right where we opened again, and then started to sell off in the last hour. It really sold off sharply, right? So then on Wednesday, now what we've got a gap up, a big gap up, takes us right back into that range we've been stuck in. Headed higher in the first hour or so, dead flat the rest of the day. We did close on the VWAP, so it's just a middling range. It really wasn't much of a tradable day from that perspective. It certainly wasn't a sell-off day. In terms of economic data coming out for the rest of the week, Thursday, import-export prices an hour before the bell, initial and continuing jobless claims an hour before the bell, natty gas an hour in, 30-year bond auction at 1. Friday, retail sales, non-farm productivity, preliminary unit labor costs an hour before the bell, capacity utilization, industrial production at 9:15. At 10 a.m., 30 minutes in, we got the preliminary University of Michigan sentiment and business inventories. So we will see what all this brings, but it may not be that exciting. Still looking at that sell signal though in the broad market and some of the other sell signals we're getting, and you got to have a downward bias. If you're thinking upward, you've got something wrong in your head. Obviously, the advanced decline ratio shows that after today. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading Thursday and Friday.